Good morning. We continue today with Chapter 7 of Internal Auditing. This is a fun chapter. Brings back a lot of memories from my career because I had a double major in computer science and accounting and spent the first part of my career in IT as opposed to accounting, sort of unusual, before I moved over into accounting and moved up through the ranks there. But what we're going to look at today with information technology, risk and control, how does that apply to internal audit? I can tell you the overriding concept here for you and your success is you need to be a systems person. Now, well, what is that? You need to have this, and the overused term nowadays, this holistic approach to accounting and finance is not just debits and credits, but how do those debits and credits occur within an IT framework? Now, we use online homework, My Accounting Lab in both principals and intermediate, which is good to get that experience of using software for those type of transactions. But you have to ask yourself, these systems that are being used, what kind of issues could arise from software and hardware as well? So let's just sort of go through this Chapter 7. And then we'll look at a specific case that is an SAP example that I want you to look at. We looked at it back in 3020, but some of you may not have had me in 3020 or had forgotten what we talked about in 3020 some time back. So Chapter 7, if you look at page 7-2, you know, they use a term there, bring your own device, BYOD. It has gotten so complicated now with the various interactions between the various technologies that are available to us. In fact, on 7-5, it shows us this diagram here, right? This diagram here of your local area network with our laptops, our desktops, our smartphones, printers, everything that goes along with the security and the risk that are associated with using these various technologies. The database servers, application servers, and your mainframe computers, you don't hear much about anymore. I spent first part of my career doing a lot of mainframe programming through COBOL, PL1, those high-level languages. And then the advent of web servers and so forth really were late 80s, early 90s technology that is prevalent today. The use of firewalls. I mean, the internet's not been really out there in any significant amount of use except for the last 20 years, which is pretty much the age of most of you all. But at my age, that's not that long ago. I can remember the dial-up email. Everybody had AOL. People would dial up and hear that noise from using your phone, and the first thing that would happen would be, you've got mail, right? You had a movie named after that. We've come a long ways. But going through here, I mean, you can read about the various technologies here. Most of this is stuff you've had in undergrad or you're encountering in your job. Hardware, networks on page 7-6, computer software, the databases and so forth. Information, people, which brings us really over to the guts of this chapter, which is on page 7-8. And what we see there, what are the IT opportunities and what are the risks? I mean, if you remember back in Chapter 4 on risk management, opportunities, the possibility that an event's going to have a positive impact on achieving your objectives and financial objectives. Risk is a possibility that an event will occur and negatively affect your performance objectives. So keep that in mind. Opportunities enabled by IT. They throw out their ERP system, enterprise resource planning systems. ERP like a SAP gets thrown around a lot. JD Edwards, Oracle, there's several of those. SAP is one that gets the most recognition. I know at XI we used JD Edwards when I was at Nuclear Fuel. We had a combination of several systems, Data Design Associates, Information Science, American Software, and these were all integrated together. Some of it took a little bit of programming on our part to do that. But most companies now don't have these multiple systems that they have to integrate because there's inherent risk associated with that they communicate with each other in a proper manner. So a lot of people will adapt and just use one system. And we put in a J.D. Edwards system. I think it was back in 2000 at Exide. We'd use this homegrown batch system for about 6 years. And then we moved over to J.D. Edwards, which is very similar to SAP. It's a real-time inventory, general ledger system, procurement system, materials planning system that was fully integrated. But SAP is the one most people talk about today. When I went to Lear, I was only there for about 3 months in Morristown back in 2013. They were in the process of migrating to a SAP system. They had about 3 different software packages and none of them communicated with each other. Everything was manual. I think it was a Lens system to Hyperion, and I can't remember what the third one was. But there was so much takes data from one system, keyed into this system, keyed into this one, instead of having these that the data resides in one place and it is input in one place. Anytime you have that type of a system, you've got a lot more controls. And SAP is, obviously they have the controls in there, which as internal audit likes to see. Internal audit gets a little nervous when you've got all these multiple systems. And usually have a lot of paper files and so forth that people have signed off on to verify the accuracy. But I'm getting a little bit ahead of what's in this chapter. But ERP systems, these are real-time, non-batch. When I say batch system, there is somewhat batch system even in an ERP real-time system. When you're making journal entries, typically you'll make a journal entry, maybe 20 lines, and then it's a entry that someone else is going to approve and then post that, and then it goes real-time posting to your ledger. But when I say real-time, it's when you make a transaction like moving material from one place to another or making that post. That is a real-time post that may or may not be associated with batch. Batch is usually what happens at the end of the day or at some point in a collection of transactions. So ERP system, very important. EDI, computer-to-computer exchange of electronic data interchange of information. You see a lot of that now with electronic invoicing coming in from your suppliers to you, to your accounts payable. That comes automatically. Someone doesn't get a paper invoice anymore. It's all automatic. Our paychecks now, I mean, how many people get a paycheck? Very few. Now it's ACH, which is similar. Automatic clearinghouse to go into your bank account. You don't have a check that gets cashed. But there's a lot of opportunities enabled by IT of making better decisions, more timely, more accurate decisions from real-time information. Less people involvement, human involvement there obviously drives out cost, doesn't it? IT risk, what if you have power outages? That's always a concern. Transmitting information could be intercepted or stolen, misused. What about computer software? I'm at the top of page 7-9. Computer software that is inaccurately programmed may produce invalid, incomplete, or inaccurate information. That's always a danger, especially when you got these separate systems that someone has programmed locally to interface. It's always a danger. And then sometimes you may have a software system that you purchased that wasn't tested out. I can give you a good example of that on a payroll personnel system we bought back in the mid-1980s. Paid about $100,000 for it. And it was a big step up from what we had because HR had their online information and separate files. Payroll had theirs. It was just not a good situation. Anytime an employee had a employee address change, they had to go out and change it like in 3 different places on the computer. And so buying a new HR system, which was payroll involved, changed it one place because it's a real-time database. Problem with this software that we bought through Information Science out of New Jersey it was what's called a DL1 database, data language 1. I don't know if that still exists, but it was a real-time database. But information science, even though they marketed that, yeah, we had the DL1 database, really their bread and butter was what's called a VSAM type database, which stands for Virtual Storage Access Method. It's just a file system that's different than a database system. It's just a different kind. But that was the one, the VSAM was the one people were buying all of your reference checks. People who had bought this software said, yeah, it's a great system, yada, yada, yada. But the DL1 that we used in our plant had not been debugged and tested out. Completely different language. Functionally, outwardly, they look the same. They look identical, but inwardly, the guts of it and how it operated, entirely different. And we wanted DL1 because that's what we're using for our item control and what we're using for nuclear tracking and so forth. So that's why we stuck with the DL1. But that process, because I had just moved over from IT into accounting to implement the software, the process of using this DL1 database of processing payroll, we knew we had problems right off the bat when things didn't balance. And so we basically debugged their software for them, the DL1, told them what the issues were. Because each time we ran a payroll, this was probably in April or May that we were implementing this, we thought we could load year-to-date data for payroll, right? Gross wages, all that, job pay history, current salary, all of that stuff. We thought we could load that and then start processing payroll maybe in June and just add to those accumulators. But when we ran that for May, found out the totals were way off. It was really messed up. Without going into a lot of detail, we ended up backing up and starting with a fresh database as of January 1, and we processed every payroll from January 1 all the way through September. That's when we finally caught up debugging this to make sure the system was working the way it should. So we were, in essence, doing what's called a parallel testing, which I'm going to talk about later as well. We were doing parallel testing of, we were still using the old system all year up through October or the end of September. And at the same time, we were doing the information science new system, trying to catch up, running payrolls instead of every 2 weeks. We were running payrolls as soon as we could get the things worked out. And of course, it was a pretty steep learning curve as you got toward the end, catching up. But at first, it was like processing a payroll, and then 2 weeks later, we weren't making any progress. But toward the end, I was doing 2 or 3 payrolls a week and making sure all the buckets matched the system we'd already paid people from. So we were parallel testing all the way out. But those are some issues that you will run into. And of course, that from an internal audit standpoint, they really start to wonder about the risk associated with that. And this was back before there's much risk talked about with IT stuff. Databases may be infiltrated for the purpose of misappropriating or misusing information. I tell you another thing there is access to database and the information. Some people don't need access to the software at all. I mean, as far as the data that's out there, they shouldn't have view only. So some have no access, some have view only access, which means I can see the data, but I can't change it. And then the third one is update ability, which means I can change the data that is out there, right? So those are 3 levels that they don't go into here in this chapter. They may later in the book, I don't know. But no access, view only, right? View only and update capability. I worked in a nuclear plant initially when we were doing this software here with the information science HR database. And I had security clearances through the NRC and the DOE, which is pretty high level security clearances, but I didn't have a need to know certain things. So even though I had these clearances, I didn't have a need to be in certain areas. Well, that's similar to what you see with software. Maybe you should be allowed to see data, like journal entries that someone has made or where somebody lives. Maybe you're allowed to see where somebody lives, but you're not allowed to see their salary or wage. Or maybe you're allowed to see what department they're in, but you're not, and their attendance, but you're not allowed to see where they live, because that's a big deal now, right? Or their salary. So you have to work through that and make sure controls like that are working in the software that you have, whether it's QuickBooks or a huge mainframe system that SAP is running on. It's very similar in what you're going to encounter from an internal audit perspective. You know, at Exide and of course at Lear and NFS, all these places, if you're able to input a journal entry, not everybody can put a journal entry in, but if you're given access to actually enter a journal entry, someone else is going to post that, usually the next level. And depending on the dollar amount, the limitations there, maybe somebody beyond you have to approve that journal entry, or maybe it's approved at the corporate level. Any journal entry I made at Exide at the plant level, no one at the plant could approve that journal entry. It had to be posted by the division controller. And oftentimes they would call me and ask for supporting documentation instead of just carte blanche going through and approving whatever I put in. They go through a lot of these different risks. On bottom page 7.9, selection risk, development, acquisition, deployment risk. I mean, I'm telling you about some of those risks associated with software, of what you buy versus what you develop yourself in-house. You know, nuclear fuel had a very elaborate real-time software system that was used for tracking uranium. You can imagine, you can't lose any uranium, unlike lead that we tracked at Exide in Bristol, which was 35 cents a pound. And here you're talking about uranium or whatever the form was at nuclear fuel. It was a home developed system, very state of the art. DL1 database, DMS mapping to the online screens. In situations like that, I mean, nobody's developed software to track uranium. They may now, but they hadn't back in the late 70s and early 80s. Nuclear fuel was the cutting edge on that. But that's an unusual environment when you get into working for healthcare or working for manufacturing or something like that, or service. All these software systems are very well tested, proven. You don't have the issues like we had with that information science payroll personnel system back then. But again, they talk about several risks there on page 7-10. They go into IT governance, a lot of boilerplate stuff here, the risk management. And then we get down to the controls, which I like to talk about on 7-13, because I always like to make stuff like this real. You can read all this stuff on your own, and I strongly encourage you to do so, because you have to answer these multiple choice and in some chapters, discussion questions as prescribed in the syllabus. So what we see with these IT controls, they break it down into general controls and then application controls. And especially those application controls around input, processing, and output. Those three, right? Input, processing, and output. You know, you've heard that term a lot of time, garbage in, garbage out. And that's where what's going into your software system and what comes out of your software system depending on what goes in. If you're putting garbage in, you're going to have garbage going out. And you have to design your manual processes with a certain risk tolerance in mind of what you're trying to do. Now, this sounds big picture, but your software is not going to cure your problems. So many times we think, well, let's just automate that, it'll make everything better. If you got poor procedures up front in your internal control narratives, automating that is not going to help. And if you're going to violate those, if you're going to, you know, like we looked with the BVUB link last time, the stuff they were doing there, they probably had good software. They just violated everything on the front side. And it was the people at the top who were doing that. So you got to learn to blend these narratives, you got to look at it holistically. I hate using that word, but it really is a good term. Holistically on your accounting processes, your business processes, to make sure you've got control of your organization, your internal control is solid. And the software is going to be an enabler for you to do that very efficiently, right? to create opportunity, which is the other side of internal audit, not just catching errors or catching fraud, but to enable you to be successful in your business, not to weight it down. So these application controls are very important. And something I'm going to point out there, it has to do with the three-way match is a great example. And I'm going to find that here. I use this in intermediate chapter 13 because it's about liabilities. But this procure to pay, if I can make that bigger. There we go, I think. Purchase to payables, procurement to payables, right? The three-way match. You got to have a purchase order, receipt, and invoice in order to generate payment to a vendor. And hopefully you have segregation of functions that all three of those are separate, in addition to some other things. But this is an SAP handout that I found out just through a Google of the procure to pay cycle. And this has to do with how you blend your IT processes with your actual human interaction for purchasing something. So if we go over here to the right, it says determination of requirements. That's someone on the production floor, for example, or a department who's creating a requisition. Now we do the same thing here at ETSU. My executive aide will create a requisition of stuff that we need for all of our faculty. I have to approve that. She doesn't just buy it or create a requisition and somebody over at administration buys it. I have to approve that. That's what happens here with, and she may find the source as well before I actually approve it. Vendor selection, that will create a PO for, well, we probably don't create the PO. It's probably got a requisition number. Then a PO is created over in the administration building. And so that PO is the first step of that three-way match. It's a commitment, purchase order commitment. And this is through online purposes. It could be on paper. In the old days, it was a purchase order document, and that order is placed. Number 6 is the second part. Number 4 there, PO processing, the PO number is generated. That's a commitment by the company. Good receipts, or if a service is rendered, that's the second leg of the three-way match. And incidentally, that's when the obligation occurs, right? And think about that in designing a software system or a system that you're purchasing. Where does the actual journal entry get recorded for something that is being purchased? It's not here. It's not a commitment. That occurs when you receive the goods. You know, go back to revenue recognition for the company that's selling this to you, right? They're recognizing the revenue when you take delivery. That performance obligation is met. The title is passed. And so when we take receipt of a good, and that's where you got somebody out on the docks who is going into the system with that PO number that's on the receiving ticket, and they're completing the requisition there of what actually is coming on the bill of lading to go against that purchase order. All right, so that's the obligation. We'll get to the detail on that in just a second. Then at some point, the invoice is going to come in. Maybe it's an EDI comes in. Most of them are now. Used to be a piece of paper, but you would have to have in the old days, someone in accounts payable would have that invoice. They would go to the file cabinet, find a purchase order, which they should have the receipts stapled to that and match those 3 up, and you're ready for payment. So that's a very high level view of what's going on manually, but you can also see the use of software and hardware to make this happen. All right, so here's the purchase to pay cycle. There's the requisition, there's the purchase order. You see there's no journal entry there, is there? Release to suppliers, there's a purchase order number on there. That's the company has committed, right? Committed to purchase from them, but there's no obligation yet. Obligation is a key term, meaning when there's an obligation, that's when you receive the goods. So what happens? You debit inventory or asset or expense. If you're expensing it as a debit, you're crediting this GRIR. Now, what is that? That's a goods received, invoice received, clearing account. Since you've got the goods out there on your dock, you've taken ownership, title is passed, the company you bought from has booked the revenue, now you're showing this as an expense or inventory or asset. You're putting this into a liability account there, GRIR, that's a liability. All right. Then when the invoice comes in, you're going to clear out the clearing account, right? Debit that to zero, and then it goes to whoever the specific accounts payable vendor is, who you bought it from. All right, but the obligation occurs there. Then accounts payable, the payment run, the payment, you're going to take it out of accounts payable and take it out of the bank. So zero that out. So at the end of the day, you've got what? A debit to either expense, inventory, or asset, and a credit to cash when all this is cleared out. So that's just a high level view of what's taking place. So what does that look like from an SAP standpoint when we start talking about software and IT? Well, they've got what's called an MM transaction code. That's probably what is being used in SAP to drive this. But there's the purchase order. F1, not sure what the F1 is. That must be document. So there is no document. Stand for probably form. But the goods receipt, right? That's when you actually have a journal entry. And there's the debit to the T account, which could be expense. So there's the goods receipt. And of course, there's the one credit there to goods receipt, invoice receipt clearing account. And then when the invoice is actually received, you're going to take it out of the goods received, right? And put it to that specific vendor. But this is a SAP three-step verification. Any software worth its weight is going to have something similar. We had an American software system we bought at Nuclear Fuel probably 30 years ago, right around 1990. That's the same thing that you see here today. A lot of stuff hasn't changed. It's real time. Maybe the software or maybe the hardware that's being used is different. Maybe a server versus a mainframe. But this is a process of accounts payable and purchasing. Most of your disbursements are there. You see the same thing with HR and accounting. HR controls the wage bases and so forth. Payroll is processing the time that's worked, and you got production on the floor recording, or departments recording how much time was worked. So those three is kind of a three-way match in payroll and HR. You got a three-way match here. And all this is really predicated on the segregation of functions concept. You can read the rest of that if you want to. That's the essence of what I wanted to share with you in this. All right, good stuff there. But you know we're going to review intermediate and advanced accounting here. So now we look at page 7-14, IT control framework. And that's what we just looked at there with the application-based controls down there at the lowest level. And that's where the rubber meets the road. And you can see from the top with governance, the policies that are established, then you drop down to procedures. It goes from governance to management, standards, your organization, physical controls, and you get to the technical side. That's where, very important, the systems controls, and then the application controls, like we saw there with SAP. They make a great point there on 7-15 with segregation of duties, vital element of many controls. I mean, that's usually when you've got fraud going on, that's the problem. Although sometimes not having segregation controls can lead to errors. You got one person doing everything and nobody watching. But oftentimes fraud occurs from one person doing it all. One person initiating. You know, it says here the functions of initiating, authorizing, inputting, processing, checking data should be separated. So no individual can create an error, an omission, or authorize it and obscure the evidence, which is always a danger. But look at that SAP. I mean, you had a requisitioner, right? You had the approver, departmental approver. Then you had someone generating the purchase order in the purchasing department. I got three people. The receipt that comes in to your receiving docs, that's somebody entirely separate as well. And then the invoice that comes in to accounts payable, there's 5. And then somebody else going to do the check run, 6. And then somebody else going to do the bank reconciliation, 7, right? You can throw in 8 there. Somebody else going to sign the check. So those are examples of IT organization management controls. IT technical controls. They go into top of page 717 about developing your own software or purchasing. I've talked a little bit about that already. The testing of software, we found out that we couldn't just do a pilot test. A pilot test is usually you run, in the case of accounts, in the case of payroll, run a payroll and compare these reports with reports from your other system, right? So you're paralleling as well. Parallel, I mean, you're running both systems, the old and the new, parallel along until you're ready to cut the cord on the other one and just go with the new. But pilot, you're just running and comparing to what it should be. Sometimes you do both. You're going to do a pilot and you're going to do a parallel. And you might find out you got to do a parallel like we did, starting in May, and it took us till the end of September, early October. What is that? May, June, July, August, September. It took us almost 5 months, and we didn't think it'd take just a few weeks. So it took us that long to parallel and get everything up to speed and debugged. But pilot testing, parallel testing, and then the one that when going live, when I was at Exide, I still remember it's 1st of November 2001, when they made that choice to go from a batch system, which I don't know, I think it was an old Oracle system, to go with JD Edwards, which is an SAP type real-time system. There was testing that went on by our corporate people, but they were rolling this out to all the plants. Well, they just rolled this out. We did very little testing and it went live. This is like they cut the cord at midnight one day, and 12:01 you started with this new system. They knew it worked for the most part. If there was issues with it, we worked through that as we went forward. That was really, you talk about seat of the pants. They're a large company. But when you get in large companies that have low margins like battery manufacturing did and Exide, you cut a lot of corners. Nuclear Fuel, being a government contractor, they had the luxury of being reimbursed to spend the money to do it right the first time. But those are types of testing that you see there. And that third bullet point on 717, system development should be conducted in a structured manner to ensure the requirements and approved design features are incorporated into the finished product. Testing should ensure that individual system elements work as required. System interfaces operate as expected. The system owner has confirmed that the intended functionality has been provided. Now, jumping back to the nuclear fuel example with our mainframe HR payroll system, I actually wrote the interface from that system to our general ledger because the general ledger was still separate from what we had with payroll personnel. Wasn't a big deal because that's fairly straightforward, but I wrote what's called a bridge program that took the file that the HR payroll system generated after every payroll run. I wrote a program in COBOL that converted that format into a format that was a journal entry for our general ledger. Had a report that you could look at and compare with what we'd been doing, but that's probably the easiest part of the whole implementation. But that was the only interface between our HR payroll system and our general ledger, because you don't look at the general ledger, look for payroll information or HR, those are separate. But you do have that interface of wages earned, right? Where are you charging those wages? Which buckets does it go to? Is it direct labor? Is it indirect labor? Is it overhead pool? And then charging out to the various contracts. So those are issues that you will encounter in audit that you want to verify. The application-based controls there at the bottom of page 717. Input, checking the integrity of data. I say all the time, the biggest challenge for accountants and internal audit is, do you have accurate information that you're making a decision on, that you're making journal entries from? That's the real issue, because we get used to doing online homework and stuff, and the assumption is that data is accurate, right? And I know a lot of times if I give problems that have more information than you need, some students get upset about it because they think, well, I didn't really need that information. Why did they put it in there? Well, welcome to the real world. You're going to have all kinds of information, and you have to decide what to use and is it accurate, those two things. And so input controls are very important, processing controls, output controls, management trail. very important, bottom page 717. Processing history controls, audit trail. I talked about that last time. Any software that's any good at all is going to have an audit trail of any transaction that is entered to modify a wage or modify a invoice or any of that. An exception report is what it is. An audit trail will tell you what has happened. And those are very important to keep and someone to sign off on at a higher level, which is really what? A compensating control. Page 718, excellent page there on examples of IT application-based controls. These input controls there. Record count, how many employees are you paying? Batch totals, hash totals. Read that on your own, very important, very relevant information there. Programmed edit checks, field check, completeness check, reasonableness. You should do a reasonableness check when you're taking an exam, right? If you don't get some crazy number, you know it can't be right. Good stuff there. So that brings us here toward the end to page 719, getting into the IT proficiency and due professional care. One thing I just can't say enough is you need to be a systems person. Don't just think I'm an accountant, because if you get into internal audit, you are going to turn into a systems person. And that's why internal audit is really a great career, because you do get involved and exposed to a lot of different business processes in your company. The sources of IT audit guidance there, the GTAG and GATE, they're mentioned 722. You can read about that on your own. But that pretty much covers chapter 7. And I went on longer than I planned, but I think it was good conversation for me to relate some of the things I've encountered in IT and how this really is from a holistic systems view. What that means to you if you find yourself in internal audit at some point, or making sure that you satisfy what internal audit is going to ask you about, and ultimately external audit. So I hope you have a good day, and we'll tune in again next time and do chapter 8.